Hey guys, welcome to a brand new show which probably nobody's gonna watch. Hey guys, welcome to a brand new show with our top hosts, the idiot and the other idiot. On today's episode, we are going to talk about personal finances and investments. Sounds boring, I know. But what did you expect on a finance channel? We aren't going to talk about Kylie Jenner's booty, although that booty makes money, and money is finance. Sorry about that. Back to the show. So, what do most people do when they get their salaries? They save it. Some save it for emergencies, some save it to buy a house, some save it to get plastic surgery done. Looking at you, Kylie. So, how do these people save it? A simple but absolutely dumb way is you work your ass off, you get paid by the end of the month, and you just let that salary keep getting collected and collected and collected. Honestly, a fifth grader would know better than that. And if that's something you're doing,
stop it. Get some help.
see, the reason why I say it's a dumb idea is because inflation. It causes prices of everything to go up while the value of your savings keeps dropping each year. To be honest, inflation is not exactly but almost as deadly as the virus that's around right now. But nobody will talk about it. So, a moment of silence for us in the future and our future generations. So, what do you do in this situation? You invest. In our country, there are a few places where people usually gravitate towards when it comes to investments. For example, there is savings account, there is FD, there is gold, there is real estate, and for our Khatro Ke Khiladi fans, there is the stock market. Okay, I've been told to say that this show is not sponsored by Khatro Ke Khiladi. Makes no sense. Any and all investments have these three very important aspects: return, risk, and time. Now, you must always make sure that your return rate is higher than the inflation rate, otherwise, it's absolutely waste. Now, higher returns requires higher risk or sometimes more time. They all just go hand in hand. But suppose you're not a Khatro Ke Khiladi and you don't want to take a risk, but you still want to invest. Savings account is just for you. Minimal risk, you can cash in and cash out whenever you like. Just don't expect great returns. Now, FD, that is fixed deposit. This will be explained to you by our second host. Over to you, idiots. अब बोलूं? नहीं. अभी? हाँ? Hi दोस्तों, I'm here to explain to you what is FD यानी fixed deposit. जैसे गुरुजी बता रहे थे, returns, risk और time. Fixed deposit में जो है उसमें risk थोड़ा कम है, but हाँ इसमें time fixed है और आप अपना पैसा जब तक ये time पूरा नहीं होता निकाल नहीं सकते. But इसके वजह से इसका returns भी high होते हैं. इसके returns कुछ आपको 6 to 8% तक के returns मिलेंगे. Over to you, गुरुजी. Wow, for once this idiot wasn't an idiot. Anyway, next up is gold, and this will be explained to you by our third host for today's episode. Yeah, hold up. Let me just get this tweet out real quick. Third host of today's episode. Alright, yeah. Gold. Yes, I have to talk about gold. Right. Everyone knows Indians love investing in gold. I mean, have you seen that guy? What was his name? Buppy. Yeah, Buppy. If you asked a kid, he'd probably think this guy invented gold. All hail Lord Buppy. But turns out investing in gold now is as risky as ever, because if you see a graph somewhere on the screen, it will tell you how from 2011 to 2012, It changed drastically, but ever since then, the return rate has been steadily fluctuating, which just suggests the returns will be minimal. But will that stop Indians from buying gold? Hells no. As we had this whole thing, my man Buppy probably bought another 10 bricks of gold. Yeah. When am I getting paid for this? Well, that was an interesting presentation, but all true, yes. Anyway, next up is real estate. Investing in real estate has low to moderate risk. Now, if you take a look at the graph, uh, wait a second. That's not the real estate graph. That that's the Rona virus graph of 2021. Yeah, we definitely f***ed up there. Yeah. Yeah, okay, that's the real estate graph, and as you can tell, it's been fluctuating ever since its peak in 2011 quarter, and that just suggests that the returns won't be as high in 2021. Now, in the 2011 quarter, the returns were as high as 30%, while in the 2020 quarter, the returns were below 6%. Now, a main disadvantage of investing in real estate is capital. You basically need a huge lump sum of amount lying somewhere in your bank account. Only then you can treat this as an investment tool. And with our dying economy, the only people who can afford that are the rich. Looking at you, Mr. Ambani. Finally, we have stock market. Now, this is the high risk, high reward grounds. You could either get really high returns or lose tons of money. This is why I call it the Khatro Ke Khiladi investment. Now, how risky a stock is, that completely depends on what kind of stock you're investing in. And for that, you need to have tons of knowledge on what stock is good and how well it's been performing. Basically, you need to have a full-fledged background research before investing in this if you want any sort of return. And with that bell, you gotta end it here, folks. We will continue this on the next episode. Hit the like button if you like this episode. If you didn't, please go get your COVID test done immediately, because I'm afraid you have lost your taste.